This past weekend, Warren Buffett released his 2025 shareholder letter to the Berkshire Hathaway shareholders. Today, we're going to be talking about what he thinks about the stock market, his cash reserve, and key lessons that we can pull from this information from one of the greatest investors of all time. This is one of the articles that I've taken a look at. 3 tips from Warren Buffett's 2025 shareholder letter that can make you a smarter investor. So, we have to learn from our mistakes. Buffett admits that he makes mistakes, and that's the key. Instead of chasing perfection, he knows you realize that you've made a mistake and then focus on learning from your errors. What I take away from this is that we don't need to beat ourselves up about making a bad investment, but just analyze what went wrong, make the necessary adjustments, and move forward. In my personal portfolio, what I do is always make sure that I am making strides to mitigate my risk, using a stop loss if needed, keeping a close eye on my investments, being willing to cut my losses rather than hold on, diamond handing something that may never turn around. Now, it's been a few years that I've been investing, so I'm not running into this as much as I did, say, 5 years ago. Always having a full investment plan, start to finish. And if something changes about the company, be willing to make that adjustment. Next, focus on the big wins, not the small losses. Buffett says a few great investments can more than make up for many small mistakes. In his portfolio, for example, take Apple. Berkshire's investment into this company has been massively outperforming many of their losing choices that they've made over the years. The lesson: stay patient and let those winners grow. Taking a look at my portfolio, there are some that are currently in the red, like Disney, Target, and even Realty Income in this particular portfolio. But the good outweighs the bad. When I am deep in profit in many other investments like Apple, Amazon, Google, Meta, VOO, and even with the extreme pullback Tesla. Buffett also emphasizes that success is not about having a fancy degree. It's about skill, discipline, and decision making. Investing is for everyone. We didn't go to Ivy League colleges and grow up around people that were talking about these things. But today, the opportunity is right in front of us. So we need to focus on being consistent, even into a basic ETF, and you can be on your way to building wealth for the long term. You don't have to have any fancy credentials. You just have to have the right mindset and be consistent. When it comes to his portfolio, currently Berkshire is sitting on 334 billion in a cash reserve. So Buffett is not just giving tips and advice, he's making moves, and investors like me are paying attention. Right now, this record breaking amount in the cash reserve is not normal. Historically, Buffett keeps large cash reserves when he believes that the stock market is overpriced or facing serious risk. So, what does this mean? It looks like they are waiting for a more attractive opportunity in order to invest more heavily, waiting for a major downturn or correction in order to deploy all of this capital that they're holding on to. So, I never stop investing completely. I don't take any breaks from my investing, but I'm going to have as much money as possible ready in order to go harder on those red days, even if it is a long stretch of time. I want to be on track to build my wealth and take advantage like the millionaires and billionaires do. So I guess we should be taking this as a sign that current investments are at their all-time high, and we should be cautious and come up with a plan. Now, let's touch on his thoughts for the stock market when it comes to 2025. Buffett and his team have seen market bubbles before, and they know when things feel overpriced. With the stock market hitting all-time highs, Buffett is reluctant to invest heavily. This suggests that he expects these things to be occurring: more volatility ahead, better opportunities in the future, and that investors should be patient rather than jumping into expensive stocks. So, looking back to the past history of Berkshire Hathaway, we can see that Buffett's biggest investments come after the crash, not before. So, how should the regular investor, the retail investor, as they call us, react? Be patient. We can see that these whales, like Buffett, are not rushing in, and neither should we. Stick to our long term plan. Keep some cash ready. If a major buying opportunity comes, you'll want to have that money on hand. Focus on high quality investment. Buffett still believes in great companies with strong fundamentals. Ignore the hype. The market might feel exciting right now, but Buffett's strategy is about long term value, not short term speculation. Buffett's latest moves send me the message that it's time to be smart, not greedy. Don't be shaken out of good positions that you already have in your portfolio. Everyone makes mistakes, but we have to focus on those wins. Keep the losses small and don't be afraid. Keep up with your investing. Realize the power of investing. You don't have to pick individual stocks if you're not ready for that. A well diversified exchange traded fund, ETF, with a low expense ratio can have you on track to building wealth too. If the moves that we're seeing by Warren Buffett and Berkshire Hathaway are correct, there could be great opportunities ahead. So let's get ready. Let me know your thoughts in the comments. I hope you enjoyed this video. If you're not already, subscribe, like, hit that notification bell, and let me know your current investment strategies. Okay, bye.